Now, let me take you through this example. We have the following were extracted from the books of Mwenge Traders on 30th of June 2010. So you have the items here, the debtors, the creditors, even up to furniture. Now, when it comes to balance sheet, and this is what I will expect you will be doing, whether classwork or during exams, I want you to analyze that question completely. And you are doing that analysis in terms of underlining right from the title, what you expect to have in the title of this particular balance sheet, and then you analyze even the items that will be in that balance sheet. So like now, we have this Mwenge Traders. That's the first analysis you are doing. So Mwenge Traders is the name of the business. The name of the business. Then you have on 30th June 2010, that is the date. That is the date. Then definitely you've been given here prepare balance sheet. So already in the title, we have the name of the business as Mwenge Traders, then balance sheet, then we'll say as at 30th June 2010. So you have done that analysis. Then before you start drawing up your balance sheet, it is also important to analyze these items. And you are doing that analysis in terms of like data. You ask yourself, the debtors, where do they fall? Yes, they are assets, but you specify if they are current assets or fixed assets. Definitely, debtors are current assets. So you just use CA. Creditors are current liabilities. Then you have 10-year loan. 10-year loan. You have the number of years here as 10. So definitely this will be under long-term liability. Then you have stock. Stock definitely is under current assets. Then cash in hand. Cash in hand, you have current assets. Drawings. This is an adjustment on capital. Then you have furniture. You have furniture as a fixed asset. Now you've already done that. So you have the current assets, you have the current liabilities there, long-term liabilities, current assets. You have drawings as an adjustment on capital. Then you have fixed assets there. Now clearly you can see in this question you have not been given capital. So you need to find capital. So basically this question is trying to test you on a number of things. Are you able to go back to the bookkeeping equation of assets is equals to capital plus liability and be able to get capital in this? Because we must have capital. We must have the figure for capital here. So you have assets and you have you have assets is equals to capital plus liabilities. So the assets we have here, you can clearly see them. Then we know drawings. Remember we said less on capital. Now you can list the assets and then get the totals of assets. So you have 120,000 plus stock 25,000 plus cash in hand 50,000 plus furniture 700,000. You get that total. When you get the total of this, you get 895,000 shillings for assets. Then you have liabilities. Liabilities you have, as you have creditors there, 240,000. Then you add to the 10-year loan, long-term liabilities, 400,000. Those are the only liabilities you have. So this should give you 640,000. Then now you bring in, so we have, you can rewrite this formula to have capital is equals to assets plus, assets minus liabilities. Now remember this capital, there is drawings there. Remember that. So this one will say minus drawings is equals to assets minus liability. Remember the adjustment I mentioned to you in the format of a balance sheet. So we'll say capital minus drawings of 30,000 is equals to assets, the total assets of 895,000, then minus liabilities of 640,000. You can pause the video and then get me the figure for capital. So basically you will have capital is equals to 895,000, then minus 640,000, then the minus 30,000 crosses the equal sign, becomes plus 30,000. So you have the capital as 285,000. So now you have your everything. Now we can now draw up our balance sheet. So remember we are starting with Mwenge Traders. That is the name of the business. Then what are we preparing? We are preparing a balance sheet. So balance sheet. Then the period, the time is as at 30th June 2010. Then na nisiwapate hapo mnatumia hiyo freehand zenu hizo. So I expect you will be using a ruler. I know even my freehand is better than some of your rulers. Now, so remember what we said. You arrange them, assets. So you have assets. Then this other side you have capital plus liability. That is the bookkeeping equation that you can clearly see there. So even if you put here equal sign, it becomes assets is equals to capital plus liabilities. So we start with fixed assets. Fixed assets. So you have remember I've started with furniture because that is the only fixed asset I have there. So it will now be the most permanent there. So fixed asset, that is the only capital that is given. Fixed asset that is given. So we have 700,000. Then definitely we'll go to current assets. We have a number of current assets there. But remember, you order them because we have started with fixed assets. We will start with the most current, with the most permanent current asset, which is definitely stock. So you have stock, and I will advise that you indent the current assets. You get their totals before now you take them to add them to fixed assets. So you have stock, then you have debtors. You have debtors as 120,000. Debtors as 120,000. So we are done with the debtors. We are done with the stock. Then we have cash in hand. That is the next current assets. So that one. So cash in hand, you can even simply write it as cash. So that is 50,000. So we are actually done with the side of assets. So we can get these totals. And when you are getting these totals here, do not write the totals hapa chini, but write them beside the very last. Write them beside the very last. So I wish mungekuwa class mungeniambia hizi totals za current assets, but let me just do it myself. So this one is 195,000. Then we have this side, capital plus liabilities. We already got our figure for capital here. So we have capital as 285,000. Then remember we have drawings there, and the adjustment we will do on capital is less drawings, and we are lessing drawings of 30,000. So we have 255,000. We have 255,000. Then we have long-term liabilities. We have long-term liabilities of 10-year loan of 400,000. So that one will give us 655,000. So we are done with the 10-year loan. We are done with the drawings. Furniture, we are done with it. So we have creditors as our last one, and creditors is under short-term liabilities. So we have creditors, that's the only current liability. So because it's the only one, we don't have to indent it. We'll just take it directly this side, 240,000. Now I didn't put totals here because I needed to actually finish on both sides, such that the side that is the longest, like now clearly you can see the side of capital plus liability is the longest. So this one will determine how we will align our totals. So our totals will be aligned with the very last knee, such that they are in line. So this one gives us on the capital plus liabilities, we can clearly see 895,000. Then we double underline to show that we have actually closed the preparation of that particular balance sheet. There is nothing else we are adding to it as at that particular date. This side you have 598. Now clearly you can see the totals are balancing, meaning I have actually tried to do everything correct. So these totals are balancing, and that's what I will expect. Given any question, do the analysis, get the name of the business, what date, then definitely it is balance sheet. You can clearly see this title is centered. Then the items are arranged in terms of fixed asset, current assets, capital plus liabilities. You have them there with any other adjustment. So I want you to go through this clip and then try out the exercise that I will give. Thank you.